Now let's look at Article 4, resident. And this is probably one of the basic and the most important part of any tax treaty. When we talk about the concept of resident, it is important because if there is any tax treaty, now different countries can enter into tax treaty. Now these tax treaty generally give certain benefits to the people who are resident of the contracting states who have entered into a treaty. For example, if you look at in this particular diagram, we have a source state and we have a state of residence. Suppose these two states, the residence state plus the source state, enter into a tax treaty, which says that the benefit of 0% shall be available on interest payments. Now, let's say there is a third country X, and there is a company X LLC, which is a tax resident of country X. Country X wants that any interest payment made by ESCO to X LLC should suffer a 0% withholding tax rate because the tax treaty between the resident state and the source state, which is these two countries, provide for a 0% tax rate. Will such benefit be available? The answer to that is a big no. And the reason is that X LLC is not a tax resident of either country or the state of residence or country source. The benefit of any tax treaty is given only to people who are resident of that contracting state. And therefore, it is important to understand what exactly is the concept of resident under tax treaties. So in this part of our course, we are going to understand what is the meaning of a resident insofar as a tax treaty is concerned. Now, this concept or the definition of a resident in the tax treaty may be different from what may be available under the domestic tax laws of either the source country or the country of residence. It can be different. It need not necessarily be the same. But generally, what is provided is that the provisions of tax treaty will prevail over the provisions of the domestic tax laws. But if the tax treaty goes back and refers you to the provisions of the domestic tax law, then one need to see that. And in this article, we are going to come across a situation where in some cases, the tax treaty may actually say that the determination of resident has to be as per the local laws of the respective countries. But if a person becomes a resident of both the countries by application of these domestic tax laws, then how you are going to break that tiebreaker rule is something which is going to be applicable. So this was just an overview of what is meant by Article 4. Now let's look at what are the specific provisions under the OECD Model Convention relating to Article 4.
Thank you for watching our video on international tax. In case you want to subscribe to our full course, you can go to the link courses.sortingtax.com. If you are an Android user, you can download our application, and when you go to this link, you can purchase the course here. In case you are looking for a different currency of pricing, you can click on the link given in the description here and purchase the course. Thank you.